last month. That is the settlement which just got over. That is the May settlement, and also look forward towards this type of movement that we can expect in June, and the strategy that we can do for June. Okay. So let's first visit Nifty, then Mac Nifty, and some stocks for that. This month, we have seen many important events in the Indian markets, and the most important development has been the RBI rate increase which happened, and which is now in June. This particular coming week, RBI is meeting, and they are expected to increase the rates. And the government of India also took some steps to mitigate the risk of inflation. They cut the prices of petrol and diesel by reducing the excise duty, and also certain restrictions were put on wheat exports, as well as increase in duty on steel. So these had their own implications for the market. Steel stocks fell after the imposition of 15% export duty. So that was a major thing. And RBI also is likely to take further steps to tame inflation. So inflation has become a global phenomenon, and we have seen many central banks either raising rates or on the brink of raising rates. US Fed is also expected to further increase rates in June and July, and also progressively they may increase the rates to around 2.5 to 3%. And RBI also is expected to increase inflation in coming meetings, and it is expected that the interest rates will go by another 1% from year, minimum 1% per year in the next 6 months to 9 months time. So all these things also will play a part as far as the market movement is concerned, because the more and more interest rates rise, then they think the chances that the avenue for parking funds from equity can probably to some extent can shift to FDs. But it may not happen to that extent because of some tax implications. We may know that the long-term capital gains tax of only 10% in equities is still an attractive proposition compared to the FDs, and still the long-term return in equity is still good. So we don't expect that much of flight of capital because of a 1% increase in the interest rate. But what can happen is that the increasing inflation is also leading to a lot of rise in input costs. We have seen the crude prices rising significantly. Today there is an OPEC meeting, and there is a chance that they may increase the supply to counter the shortfall of the Russian crude oil supply in the global market. So if that happens, it is a welcome move, because then probably it can help to put a cap on the crude prices and also can soften the crude prices. But the rise in crude prices, the rise in other prices, so it is, and also the supply side constraints are still there. If you see the car sales, though it has increased compared to last year, the problem still remains as far as the semiconductor chips is concerned. So there are a lot of supply side shortages. So Maruti itself has got a big backlog of orders to clear. So the waiting time is increasing. So all these things means that the profitability or the corporate profits could still be under pressure. Because it is a problem imposed because of COVID restrictions, also because of the rise in inflation. So all these things are having, and then the Russia-Ukraine war still going on. So all these things combined, as some as a major impact on the valuations of companies, and hence the multiples of the market. Having said that, normally the Indian markets now, the PE ratio, the trailing PE ratio has come to at least some comfortable level to the extent of 19.5, which is the long-term average probably still lower, probably 18 or below. But it has cooled down from what it used to be 24, 28 and all. So it has cooled down. And considering the rise in the PE in future period, so this particular level of the market, which is around the 16,500, 16,600, seems to have got rid of any excess valuation and seems to be getting into a nice balance. So that's why we feel that probably any further fall in the markets is a good investable level for a slightly longer period of time. We can also be in for the surprise that like pandemic time, after the pandemic started, the markets rose very significantly within a couple of months. So if the global interest rate cycle probably looks to peak towards the end of this year, which may happen because they can't keep on raising rates, so probably it will be quite rapid. So these days it can be quite rapid. So probably for the next 6 months or so, we may see significant progress in increasing rates, and after that there will be a chance that the interest rates may have to pause for some time, because it can have a effect on the economies, and economies can cool down from the present level and probably enter into a slum. For some major economies can even enter into a negative territory for some time. So the fight against inflation can probably reduce the economic growth, but if we leave the inflation out also, then it can also have an impact on economic growth. So considering all these balances, we expect that the interest rate cycle will be up now for time being. 6 to 8 months later on, I think it will go in for a pause. During that time, probably the markets will make a heavy considerable significant turnaround in the market. This is a general expectation. But even that, if there are positive developments, like probably OPEC agrees on increasing the supply significantly, and it has a bearing on bringing down crude prices, then probably we see some, if at all the Russia-Ukraine war comes to an end. So these are positive developments that can happen within that place, within that period, and probably more containment of the COVID infections. So these things probably can result in the markets even taking a positive cue and riding on the upside even before the interest rate cycle peaks. So that is also a possibility. So from here now, with a lot of negative news is already around, so if there are no further aggravation to the negative news, we should be seeing a very stable bottom at this 15,700, probably 15,400 or so. So the 16,500, 16,600 could probably put in a decent level from where we can expect some rise, or considerable rise even, of around 10-12% per year, because long-term Nifty growth return is generally around an average is around 12%. So in some years it can exceed, some years it can fall, but the average return year on year basis is around 12% is the normal return that we get. Sometimes it can go lower. So from here we can expect that the year-on-year growth can give something like 12% or so, and so good level to really look at the Nifty index. And probably those who are looking for the extra alpha, which they call the extra increase over the Nifty or on the beta element of the stock market, we'll have to look at some important stocks which can give them that edge over the Nifty. So we will first look at the technical levels of Nifty. Now we have talked about the developments that happened, fundamental developments that happened, which impacted the market in the course of May. And whatever that we talked about, it will continue to play for June. So those developments will continue to be on the market mind. That is the inflation, Russia-Ukraine situation, COVID measures, increase in interest rates. So all these things will continue to play its part in month of June. And RBI is expected to increase the rates now, which is very well known. This is already factored. So on the day when they make an announcement, we don't expect a big movement. There could be some whipsaws here and there, but generally that measure is now well known. So now the technical level, let's go to the bigger picture. That is, we look at the monthly chart of what happened. So monthly chart, we have seen this month those 17,002 the previous month and 16,584. So approximately 500-600 points of fall on a close to close basis. Which is a very acceptable volatility for a close to close basis. So but if you look at the from the last month close, which was 17,102, the fall was up to 15,735. This is approximately around the 1,400 points of fall, which is what we were expecting. No, that is the we were talking about 3 times the option price. Option price was 375 to 400. So 1,200 points is what we are expecting on a high to low or close to low, and probably it can exceed by 20%. That's what we talked about. So 1,400 points was what we expected, and almost we got that through. So this month, we have just started right now. So we have to look at what probably can happen in the coming this month. So this week, till tomorrow we have time. As far as the Friday is concerned, we were talking that the market can probably go up to 16,800, 850. That's a possibility that we talked about it, because we got 150 rupees an option price this one. So 450 rupees is we talked about the weekly side. So let's look at how much happened this particular week. And this week, till now the volatility generally has been a little low. From high to low, we have seen only something like 200 points, 240, 250 points. So volatility, is not been that much compared to what the option market has factored. So it's slightly on the lower side. Now, coming to the market's development, we said the break of 16,400, 414 means that it's on the correction has started on the upside, and we can have support back at the same level. 16,400, 415, 420 levels can be support now. So as long as it does not break, we still see a chance for the market to go right up to the 16,825, 830 levels. So right now we will play the 16,400, 16,800 for the first portion of the month, or for the immediate week. We may see that 16,400 to 16,850. Now, if this has to be broken for a further rally, and this has to be broken for a further down, So the technical levels can change if this 16,400 level is broken on the downside. Probably then we can expect a slightly bigger fall. Bigger fall can happen. Now, immediately on the monthly side, we can let's say this is the monthly chart, and the same Fibonacci ratios if we put from the peak. So we have that 16,800 is approximately 38.2%, then 17,125. So the next level above 16,800, 825 can be something like 17,100. So right now the support is emerging very close to 16,400, 414. So that should not break for the market to remain on the bull mode. So bull mode, or at least corrective mode. But here in the monthly chart, we see a lot of those stability. There are 2 months where we can see a major pattern, this is hammer type of pattern. So looks to be this market seems to be taking a double dip support at around 15,700 levels, because 2 times during its fall it has come to that level, which is a good sign that if it holds, then probably we could be looking at now we'll remove this and so this trend line on the top is a possibility, because if it is a corrective thing, then we can see market at some stage moving back on good news right up to 17,845. So the longer bigger trend could be a 15,700 to 17,750, 17,800. So these 2 levels has to be watched. If it starts breaking 17,850, 860 levels, then probably we can say that the entire corrective pattern is over and Nifty could be targeting much higher levels. Okay, and if it's going to go below 15,700, maybe it will come down to 15,000 levels. Okay, so right now we have to look at carefully that a possibility of a correction up to 2,000 points from 15,700 to 17,700, 17,800 that cannot be ruled out. But in between there will be some resistance, 16,850, 17,125. 17,400. So these levels will definitely try to curtail or put resistance to the market movement. So generally Nifty right now on a monthly chart has a potential to rise up to 17,850 technically speaking, and 15,700 is a possibility of a big support. Now we will look at the daily chart. And also, since last month was 15,700 to 17,100, and this month it has only started, so it's too early to figure out how exactly it's going to play. But looking at it, there is if the 16,400 points hold, 16,400 volts, then in that case we can talk about 17,400, 17,600. So what is essentially important is 16,400 right now. If 16,400 is going to be broken, then probably we can be seeing another dip, which could be even up to 15,700. Okay, so that's a very important crucial area, because this could be then form some sort of a correction up move and a break below this can probably take it to much slightly lower level. But in between we may have some trend support here. They may speak about 16,100. There's a trend line which is coming at 16,100 and progressively increasing slightly to 16,110, 120, 130 levels and all. So every day there is a small increase in this one. So probably we can see some fall up to this level and then it going up. But this is a pivot low. Now what has happened is yesterday was 16,438 and today is 16,443. Okay, and yesterday was 16,438. So yesterday is a pivot low right now. So any fall below this of 16,438 itself, I think can put us into the slightly back foot. Probably we have to look towards going down up to 16,185 to 16,200, because normally this bar has been broken, right? So this bar was broken. So once if this bar is broken, then that particular low is a crucial support. So this bar, which is 16,185, I think we have to keep the bigger stop loss of 16,185. The first stop loss comes at 16,438. So the long-term trend right now is intact. The short-term upward movement is intact till it crosses 16,438. So this place, if it's going to cut, then in that case there is a chance the market can fall up to 16,185. Okay, further break around that particular level probably will mean that the 16,600 that we saw as a top and 1,200 points fall from that possibility, then probably we may be concerned for a move down up to 15.7 to 15.4 levels. So we need to be quite careful about it. So these are the two important areas. Okay, the upward level, monitor for the break of 16,695, which is the recent high, 16,850. So what you should do is, generally speaking, that suppose if this high is going to be broken, right, that is 16,695, keep this low as a stop loss, this bar low as a stop loss, 16,506. So what we should do is that we should look towards, if it crosses 16,695, then stop loss is 16,500. Keep this as a stop loss and move yourself on the upside. Okay. So this is the way you can look. You can just look at the market. Now, as a strategy, I think we need some more time to look at because here we are already on the slightly on the upward movement. So buying a call and all will not be of much help right now. The only thing that we can do right now is to sell a put, but that's quite dangerous. Sell a put of 16,200. It's not that much advisable. So what at the maximum that we can look towards doing is, we can look towards buying but so 16,600, 16,800 call spread for the time being. But that's also going to be something like 100 rupees also. It's not going to pay much. Much rewards is not is very much unlikely in this particular scenario. So I think the best thing is just look towards a plain deep in the money option. So now if now since it started to go up today, so we should be looking something like if it starts to move above this particular high, which is 16,649. If it starts to move above 16,650 itself, okay, then the corrective, but then this will become a lower bottom compared to this, right? So this is a stop loss, and you can move yourself up with a thing above 16,650 and keep this low of 16,438 as a stop loss. And for that you can just choose a deep in the money option, which could be 16,200 or 16,300 option, either for coming week, that is the week maturing 9th, right? So for that maturity you can buy a deep in the money option and roll it over in case if the profit gets extended. So this is as far as the Nifty is concerned. So our suggestion is, those who are long can keep 16,438 as a stop loss. Biggest stop loss comes at 16,185. If 16,650, 660 level is cut, we could expect 16,850 levels to be achieved. a target. Then if it starts even moving above that 17,120, then 17,400, chances it can extend up to 17,850 if the global markets get some positive cues. Now, if at all it starts to move below 16,185 and a bigger footing, then in that case we need to completely abort the entire bullish calculation and look towards a slide which could be 15.7, 15.4. Okay, so this is as far as Nifty is concerned. We will look at Bank Nifty. Bank Nifty is an inside day today and two inside days, which is a very good consolidation as far as Bank Nifty is concerned. So on a daily picture, this inside day is a good thing, and so after some correction, it is just holding on here. So we can look towards either going above this inside day high, or probably the one which is before or one which is before. So it all depends on how you what type of trading system you're going to employ. But nevertheless, I think we should be looking towards buying here. Okay, above this particular high, which is 35,676. Put this low as a stop loss right now. This low, which is the 35,288. So 35,288 is the immediate stop loss. So Bank Nifty, those who are already on the long side, 35,288, 285 is the immediate stop loss. Okay, and let's look at where it can move. So a bigger fall, of course, now can bring it up to this, because 34,800. So 34,800 support, 34,800. That's a very important support. A break below this, probably we are at about our bullish any upward bullish calculation which we have. Then if if it starts to move up and exceed this level, then in that case we can see rising back to 36,335. This particular high, this particular high which is 36,300 levels. So so possibility up to 36,300. So right now we are seeing a possibility where it could be up to 34,800, 36,300. So a failure below 34,800, first of all, a failure below 35,285 can pull it down here. So the first stop loss on long positions come here. Second stop loss comes here, 34,800. It's a very important stop loss. And 36,300 is this particular high. Then probably the next high can come closer to 36,700. So we can expect some sort of a movement right up to this. So we have already talked about Bank Nifty getting a steam which is up to 3,000 points in a month side. So in the recent period we have seen this is on the 23rd May. So by 23rd June, possibility up to 37,000. Above that, I think I'm very much doubtful about the present bullish situation. So any fast move towards 37,000, be careful about it. 36,700 to 37,000, be careful about it, because it's still very difficult to believe that this market has completely managed to go on the upside. Now, right now, generally speaking, since we have this particular one, so on a weekly chart, if you look at it, it may be clear on the type of resistances that can come, and this particular level, which is what we said, 36,375. So that is what we have. This is the place where we have marked, right, approximately. But this is a very important resistance. So keep that level in mind. From there, if there is any fall reversal, just ensure that you work out of that stock. You come out of that place. Now this is the area of support, that is the 35,016 here in the low, which is showing in the weekly, but 34,800, because 34,800 is this 2 weeks high which was cut. So 34,800 you can take as an important bottom right now, below which probably we can see again some sort of a reversal that can take place. So now, but the bigger picture still is that Nifty, Bank Nifty, one thing is that, see, you can just see this particular one. So it could be probably still having some sort of a triangular consolidation. But one heartwarming thing is that Nifty dipped twice to 15,700. But this time, when Nifty went back to this original low level, Bank Nifty was slightly on the higher side. Slightly on the higher side. So in a weekly chart, you can see some sort of a bottom which is above the previous important bottom, which is a good sign. So it looks as if the Bank Nifty relatively looks strong compared to Nifty. That's the general impression that we get from the chart. So that may be contributed because of other stocks which we'll see, SBI, ICICI and HDFC. So Bank Nifty right now looks to be all right because a lot of consolidation has taken place in the last 2 days. So if the global developments are good today, then we could probably look towards some sort of a rally coming tomorrow. So this is Bank Nifty as far as Bank Nifty is concerned. Look at the bigger time frame, which is the monthly chart. So monthly chart also, though we have seen a huge 1, 2, 3, 4, 5, 6, 7, 8, 9 months now, I think, since the top was made. So we should be looking towards shortly this area should give way for the upward move at some stage. So it's a good level to keep on looking at what where we may have to buy. So keep an eye always thinking about where to buy. It will give you a lot of some opportunities in the next couple of months because of the increase in interest rates. So whatever that we are going to get in the next 5-6 months for investment, it is going to be very good. For investment also, it's going to be very good. So this is as far as Bank Nifty is concerned. So we will now look at some stocks. Now we'll look at Reliance. Reliance Industries on a monthly chart is in a bull mode because higher tops, higher bottoms. So no doubt about it, right? So we look at the weekly chart. So weekly chart, we said last week, we said very clearly that if it breaks this particular weekly high, then be on the long side. If it breaks below this weekly low, go for a short. This is what we had said. Now it is broken on the higher side, which is 2656. So right now what we need to do is that we just have to track the market and be on the upside because we are getting a very bullish picture right now because of this break. And after break of 2656, you can see the market Reliance has zoomed to 2724. And let's look at the daily chart. You may remember we talked about that in case if that particular high is taken off, we should go. And even before that also we said, once a break of this happens, then we should be going for the long situation. So right now, I think we should be looking towards keeping a stop loss at those levels. The short-term stop loss emerges at this level. You can keep this low, this is 2616. 2616 as a stop loss. So long position in Reliance can be held with a 2616 stop loss. Okay, the first stop loss at 2616. So this level is unlikely to be broken. So probably we need to keep our bigger stop loss at this level, which is the 2522. So I think the first stop loss is coming at 2616 and the second stop loss is coming closer to the 2520 levels. So with this we are looking with a very bright scenario as far as Reliance is concerned. And now we will look at other stocks, which is ICICI. Some of the banking stock and tech stocks, we will look at it. So ICICI also now ICICI it fell from 777 to 675, 100 rupees, which is approximately 14%, right? So 100 divided by 770, 12.5%. So normally, this stocks, generally speaking, stocks like TC, that is ICICI and all, if the equity markets on a broader range corrects by 5.5-6%, then they correct by 11.5-12%. So here normally we see any correction which is above the 11.5-12% here. At that point of time we need to see whether it looks like bottoming out. So here, when it fell here, we have to look at the pattern which can look towards taking up on the upside. One thing is that once it started to form a bottom here and another bottom here, okay, and the right time is not here to buy, but at this place to buy, because you're getting a higher bottom compared to this, and ICICI has corrected itself by 11 to 12%, which is a normal correction for ICICI. So once that happens, then we should go long above this particular level, which is 698 or 699, right? So we should identify that way and look towards. So now, right now, I think this is a very important bottom. So we, as far as ICICI is concerned, so this is an important bottom. Now it looks as if it can still head higher. So we will not put a restriction on this one, but let's look at this trend line. So this is a trend line which has to be taken off. So still this could be a correction. If it starts to move up, then probably going up to 770, 785. So from where it can fall. So anything around 775, 780 levels can be still a resistance. Around 780, 785 can be a resistance. So there is no point in buying ICICI at 750 levels for only 3-4% on the upside. So we need to see some sort of a correction that can happen before we enter into a buy as far as ICICI is concerned. So Reliance is something which you can tick immediately. Now we will look at SBI, State Bank of India. So SBI, let's say from 522, it has come down to 440 levels. So we have got some 80 points down, which is 15-16% in tandem with what has happened in the broader index. So it is moving very closer to what the broader index is. So right now SBI on a daily front looks to be good, but on a weekly front, let's say, because they look very choppy as far as daily is concerned, we will look at the weekly chart. So the weekly chart tells us that this is a bottom and this is another bottom, and this is a weekly bottom which is higher than this bottom, which means that we can look towards some sort of a buying above this particular high. So we can be a buyer keeping this particular low as a stop loss. So SBI doesn't look that bad, and if you see many times it has fallen and taken support at this level 2-3 times. 440 has been a very important support. There has been no weak low which is below 440, which makes that in the last couple of months 440 has not been broken in any weekly close. So that seems to be a good technical stop loss level for a buy on any dip. So and you can get some profit there. Now that is SBI. Now we will look at HDFC, which is another important bank. So HDFC Bank on a weekly basis, after having a big fall at around 1300 levels, so 2-3 times it had a fall and has taken support here. So if you see, this has taken a good amount of support, and the fall has taken place from 1700 to 1300, 400 points, which is more than 25, which is around 25%. So 400 points divided by 1725. Is around 23%, very, very important support. So this is going to be a very important support as far as HDFC is concerned. But on a monthly chart, let's look at the monthly chart. So on the monthly chart, also 2-3 times it has taken support here. But the chart doesn't gives great confidence. It tells us that okay, this is an important support, but doesn't mean that it should not be taken off in case of a negative development. So ICICI looks to be better than HDFC at the present juncture. So any dip in ICICI is a much better stock to buy than HDFC Bank in the present context. SBI is also good because it has not broken that 440 levels. Okay, so these are important stocks as far as banking sector is concerned. We will look at the tech stocks. Because tech stocks rallied a couple of days back considerably. So TCS See, last month has been a very good hammer pattern. So that gives us a confidence. This 3150 is a very important support. So probably we are seeing very important support emerging for TCS at 3150. That's one call you can take. Then weekly support. Now, weekly, of course, it has to still get itself into the bullish mode a little. This one, because technically we see still the trend line resistance here, right? So probably we can expect some sort of a resistance as it approaches the level, as it approaches the 3600 mark, 3600, 3650 mark. We may see some sort of a resistance there. So right now, I think we should be looking more towards resistance which can come closer to the this level. This is the 3580 to 3650 levels. So this is an important level which we have to look at whether that level is going to be broken. If that is going to be broken, then we are looking at a long-term uptrend as far as TCS is concerned. So right now TCS on the weekly chart is still bearish. Okay. On a monthly chart also it doesn't it still is bearish because lower bottoms, lower tops. So on a daily chart it's on the upside. It's on the upside on a daily chart because it has broken this pivot high. Okay, but TCS one thing is that TCS and all can have a very fast turnaround. By the time you try to turn around, you would have missed some 300-400 points from the bottom. So that's a possibility. So picking up TCS, you have to be careful, not go too much on bigger technical time frames, because there is a chance that you may miss a considerable amount of up move. Okay, so I think you should avoid weekly and daily monthly chart as far as examining these beautiful bullish stocks. So we should look at a smaller time frame, and even should not mind putting some smaller stop losses, because we will definitely get a much better result in stocks like TCS by going for a smaller time frame than a bigger time frame. So even a daily chart it's better to avoid, and it's better to go even in hourly chart as far as stocks like TCS is concerned. So now we ever since this up move was made, okay, this place, I think right now it has gone above this, so we can say that we confidently that this particular point can mark an important stop loss for the time being, 3340 or so. Or probably we can keep even this particular low as a stop loss and move. So TCS, it is better to be on the slightly on the longer side and trade on the daily chart. And trade on the daily chart as far as TCS is concerned. Sorry, on the weekly and on the hourly chart. But there are problems because stocks like TCS, generally are not big trading stocks, so it can get into a choppy mode, which can result in a little more frequent profit loss situations. But nevertheless, over a period of time, it can still give a very good result. Okay, so look at TCS, and whichever time frame you want to adopt it, but don't go for weekly and monthly and all for such big bullish stocks. So try to do it in a technicals in a slightly lower time frame, even if it means some whipsaws to be taken. So now we will go to some of the steel stocks which are also in the news. So Tata Steel. The Tata Steel FT fall, then very small consolidation, not really at this point of time very high, not clearly recommendable as far as this one is concerned. Of course, it has had a big fall from 1500 to 1000, so we need to wait and see all the negative developments go off, because we had the export duty increase and all. So we need to see how things work out. So it's better not to too much dabble in the steel stocks at this point of time. So that is as far as the steel stocks are concerned. We have looked at the high tech stocks, and we have also looked at the banking stocks. So these are the most, and also we have looked at some diversified thing like Reliance. Probably we can look at the evergreen stock like Asian Paints to know on the so this is a daily chart. Look, even Asian Paints looks very choppy on a daily chart, so very difficult to look towards any amount of trading in these type of stocks. You can only look at investment point of view, and even investment point of view, all these stocks are very choppy because they are not that much favorites for traders. Traders favorites are those which are no volatile, like no probably ICICI, Reliance. So these are the stocks which are generally preferred even for day trading or for small positional trading, and also these are stocks mainly considered for investment. So no, better not to dabble as far as trading is concerned in Asian Paints, but a very good long-term investment potential, because even during the great fall right now which is taking place, Asian Paints is generally held on. No, it's around 2,900, 3,000. It keeps visiting. 3,600 has been the recent high. So generally speaking, Asian Paints is always a all-weather favorite stock. We look at Titan. Consumption stocks. So Titan also is generally on the downside, on the consumption side. So not much of pickup yet. So we need to wait and see as far as Titan is concerned for investment. We look at the auto stocks, Maruti and TVS Motors. So Maruti is okay because compared to the fall that it had in 2020, we have seen a decent rally coming back to the 8,000 level. So Maruti is still a decent investable stock, because I think a lot of negatives are getting worn off, and the next couple of months as the supply chain situation improves, Maruti has a very good ability to pick up. So I think Maruti is one stock which we can look for investment point of view. So you look at TVS Motors. Just see, TVS Motors has done very well. In fact, it's back to its highs, and very comfortably perched now after a big fall that happened in 2020 and 21 during the pandemic time. And right now, even with the fall that has taken place in the market, TVS Motors is back to its highs, which means that is relatively a good strong stock holding up. Okay, so it's definitely something which you can buy for investment on the downside. Okay, so we have seen the bigger stocks that you can look towards is Reliance and TVS Motors, State Bank of India. We had to be ICICI after dips. HDFC, ICICI is a better pick than HDFC. TCS, we have seen that probably this month low which came, that is in May month, which came, could be a very potentially very important low. So it is still a buy on dips as far as TCS is concerned. The ever investable favorite stock is Asian Paints, which cannot be picked up based on technicals. So this is what all it is. So the Nifty as a trading call we are given, keep 16,438 as a stop loss, 16,185 is a bigger stop loss, and move up to 16,800, 850 levels, then 17,150, then 17,400 levels. So these are possibilities that can happen in the coming month. If it breaks 16,200, we may see a potential drop which could take it back 15.7, 15.4. If it crosses 16.85, 16.9, possibly it can extend even up to 17.4 or even higher. Okay, Bank Nifty 36,300, keep an high. 34,800 on the downside, also keep an eye. Okay, so thanks very much, and if you have any questions now, you can ask. Thank you. So thanks for your participation. See you next week at some other topic. Good night. Happy weekend.